So on the crypto side of things, specifically, we have centralized crypto exchanges acting as hubs. Like you heard the word centralized, right? I think this is very ironic that, you know, in the first iteration of decentralization, we have to be centralized.
It's a pleasure for Gaurav and myself to host this episode. This is part of our ongoing series that we began last year called FinTech Founders. We've now added a new sleeve. We've extended. You could say this is an extension funding round. We've extended ourselves to Web3. We're still going to maintain that same theme of looking at anything to do with money and finance and how technology crosses over with money and finance. But now we're going to do it in the context of blockchain, decentralization, and all these good things that we're going to spend the next half an hour talking to Adam and Sophie in more detail about. Now, enough from me. Adam, Sophie, could you just introduce yourselves and explain who you are and why we invited you to this podcast? So maybe starting with Adam, as you're the CEO of Fiat Republic.
Hi, everybody. Thanks for having me. Yeah, I'm Adam. I'm a bit of a geek in fintech and payments. Been that for 15 years. It's hard to pin down the moment when the payments industry became fintech all of a sudden, right? Because it wasn't called that. But yeah, I spent a bit of time in working in traditional banks. So I worked in transaction bank department in Raiffeisen for 4 years. I'm originally from Poland and moved to the UK in 2012. And then ever since I've been involved in alternative payment schemes, you know, card payments, worked for a retailer, was head of payments at Sainsbury's for 3 years. And that, you know, gave me this broad sort of perspective on payments, banking, you know, from different vantage points, the retailers, the banks, the merchants, the acquirers, right? All of the pieces of that pie. It all started coming together, you know, around 2019 when I, you know, decided to become an entrepreneur. I started my first company and actually ended up at YC with it for a short period of time, and then immersed myself in banking as a service in 2019 in autumn, and this is when I met Sophie as well. We joined a company called OpenPay literally on the same day as the two execs over there. And yeah, we've been learning about banking as a service ever since, or I've been learning, I guess, myself, because Sophie knew it intimately by then. And yeah, here we are, like building a bridge between Web3 and traditional banking right now. It's that's what I guess Fiat Republic is about.
Cool, thank you for that, Adam. And Sophie?
Yes, so yeah, as Adam mentioned, well, I started my career first in finance, but soon made the move into startups. And after like spending 1 year of launching HelloFresh in the UK, I actually just realized that I wanted to go back to the finance world. And it's how I came about with fintech, and that was like the very beginning of my steps into fintech, but as well as banking as a service. So I spent 3 years at Bankable, then 5 years at Fidor, a couple of years at OpenPay, and most recently founded Fiat Republic.
Thank you guys for that introduction. And you set up a little bit about the backstory of Fiat Republic. You've already talked about banking as a service, and let's dive in a little bit more into what Fiat Republic is and where did you get the idea for Fiat Republic to start with? Like, what was the eureka moment, Adam? And tell us a little bit about the origin story.
Sure. Yeah. So it's a funny one actually. So I've been involved in one way or another in crypto ever since 2017, the second Bitcoin boom. I guess that's what the event is called by many industry observers. Invested a lot, you know, before Bitcoin peaked out in December 2017, and then sold it, so made quite a bit of money, but then bought it when it was still like midway through that sort of falling from the peak. And then obviously it fell all the way to $3,000 per Bitcoin in, I think, 2018, mid-year. So yeah, lost some money, made some money, and that's how I learned to trade in this specific asset. Whilst trading, I started reading up on different projects and different blockchains, and there's so many of them now. You look at CoinMarketCap, there's thousands of tokens. Like it's really, sometimes it can be overwhelming. But the kind of the key let's say old school tokens are still there. Bitcoin, which seems to be taking this role of a reserve currency of the entire crypto ecosystem, and then Ethereum, which is inspiring a lot of innovation, with its smart contracts concept, right? So that's when I got into crypto. Now, when it just coincided that I was moving into banking as a service, so like banking through APIs, right? It was like abstracting the complexity of having to integrate to multiple banks and making it developer friendly for any organization to integrate to a embedded banking infrastructure, right? And those two things, when I was looking at both the crypto industry and the banking as a service industry, which was emerging in 2019, it was literally just like, Rails Bank, we're still trying to figure out what they're doing. Currency Cloud, we're just after their significant growth spurt, right? And finding product market fit. It was still a bit like in flux, a bit all over the place, right? But what we saw, or what I saw in 2019 in particular, one sort of milestone event, which defined a lot what we're doing here at Fiat Republic, Coinbase getting dropped by Barclays. Okay, that seems to have triggered a bit of a shockwave after that, because people are looking up to Coinbase, or were looking up and still are looking up to Coinbase as this golden boy of the crypto industry, right? And if they can be treated by a traditional bank like that, then what about all of those other crypto exchanges? What about all of those other, crypto native businesses, decentralized businesses, right? Like, I don't even talk about that because it's, for a banker to even comprehend what's going on outside of the crypto, outside of the centralized crypto exchange, right? Which is already something known, right? It's established. It is really hard. It is just because it's so complex, it's so multifaceted. It is by its own nature decentralized, right? So it's really hard to get the information from one place. That's what the decentralization, causes. So I had, fast forward to 2021, June, having spent a bit of time in banking as a service at OpenPaid, looking at different kinds of use cases, lenders, e-commerce, marketplaces, crypto as well, right? I'm like, well, look, this needs a bridge. There's an obvious need for someone to kind of come in and really make peace between those two worlds, right? Make them talk to one another, because they don't really understand each other. The bankers don't understand crypto. Cryptos are intimidated by the banking industry. They know they need it. They know that without working with it, they can go nowhere, because for Web3, you need fiat, right? You need the traditional, that's the entry point. But no one is doing this translation service, this kind of, understanding where both sides are coming from, and using technology, using data, trying to find common ground and build that bridge. So this was a, long story short, to summarize, it was a bit of a shower conversation with myself to kind of, look at all of those pieces that I observed, in banking as a service, but in crypto as a crypto trader, and just put them together, develop this comprehensive systemic solution for what I believed at the time was a massive systemic problem. And then, we iterated on the idea together. We came up with a very strong value proposition, which is super defensible, we believe, because it's tackling the problem from multiple sides, right? It's not just an aggregation play. It's not just a compliance play. it's not just a supplier of a service. It's beyond that, and we can expand on that as we do this. But yeah, that is really the origin story of Fiat Republic.
Cool. Adam, you've thrown out quite a few terms there. Obviously, you've given us the crypto background, the Coinbase moment, but maybe Sophie, we could take this just abstraction layer higher. And you've done a lot in banking as a service. Can I call it the traditional financial world, whatever? Let's say you've done a lot of
banking as a service, and you call us fiat as a service, and I'm fine with that.
So before we get back into Fiat Republic and what you do, fiat as a service, could we just spend a little bit of time, like just talking about what banking as a service is? I know you've done a lot on this space already. So for the audience who are listening, going, I think I understand crypto, but whatever. Yeah. But they're also thinking maybe, what is a service? What does that mean? Could you just explain what banking as a service is in very simple layperson's terms?
Yeah, no, absolutely. Sorry. So banking as a service is really giving the ability to any company to offer financial services to their end users or to leverage it for their own treasury operations from an integrated perspective. So like integrated into their systems and then like creating flows either for their end users or for their own treasury operations. It's as simple as that. When it's more complicated, and just let me touch upon it, it's when basically you go from one segment to another, because like you have a multitude of banking as service provider right now that actually caters for different segments. So like back in the days at OpenPaid, at Bankable, I was helping fintechs launch neobanks. At Fidor, I was helping banks launch neobanks. And it was a totally different business, right? But both were called banking as a service. So it's very important to understand that. And you have also different layers of banking as service providers. You have the ones that are pure tech play. For example, modern treasury, which is getting quite a lot of traction in the US. And you have like the plays with licenses. And for example, modular would be one example. So you really like have different setups that caters to different use cases or business segments.
And I want to dig into Fiat Republic a bit more, but maybe we get Gaurav into the conversation so he can lead the questioning. Now we're talking more about the business and the micro, because he's our operational guy. I'm here for the big picture.
Thanks a lot, Ronit. It's a pleasure to meet both of you, and this conversation is already extremely interesting. I think, Ronit, we're going to have a second session on this. Really, there's so much depth to cover. But coming back to the conversation very quickly, Fiat Republic, being the fiat rails, essentially offering services for people as the bridge between what is essentially the traditional world of banking and services with banking and the new world as we see it today, and all the other extended versions of services different people and different businesses can avail of in the in the Web3 platforms that are coming out with crypto rails attached to it. How much do you guys face obstacles with regulation? Because where you're sitting, right, you're working between very heavily regulated institutions and institutions that operate, dare I say it, in a gray zone, right? Because the majority of people from critical mass of adoption to really happen is key for not only your success, but for Web3's success, right? To be quite honest, and Fiat Republic seems to be a very key part to this. So how do you navigate the regulation part? Are you guys Delaware set up? Are you somewhere more crypto friendly set up? Tell us about the mechanics of what regulation you guys have today and what you're working towards tomorrow, so that people really understand the legitimacy and security which you guys, given both your backgrounds, have obviously taken into account to do this. And then we can get into products afterwards. But I think that's key.
Sure. Yeah, I can take. Sophie will probably have a couple of things to add, I'm sure, as well. But look, I think regulation is interesting, right? We're in an interesting junction, because stuff is not really regulated on the crypto side, right? There is just very rudimentary, like the AML5 in Europe, the implementations across all the European countries, which introduced, a bit more controls around how, to protect the financial ecosystem, protect the consumer as well from bad actors who launder money, who, terrorist financing, all of that, really, really bad stuff. That is the basic stuff, right? The problem is regulators around the world are not really sure how to tackle crypto. They don't understand, like, it comes from there's many reasons for that. One is they don't really understand what are the different crypto business models, right? Second is they don't really know how do they fit into the traditional finance, which is, as you said, highly mature, highly regulated. I would even say saturated, right?
Correct.
In terms of like how many people are getting regulated, and how many companies are trying to play in this space, trying to get a share of the pie. So we have taken this deliberate approach that to enable the banks to understand crypto and crypto to appreciate where the banks are coming from when they're throwing all sorts of controls at them just to get access to an IBAN, right? We need to be in the middle, but actually anchored in the traditional finance regulation, right? So that's why what we're doing is we're pursuing e-money, like we're taking advantage of the e-money regime in Europe and the UK. Obviously, they're now separate. The European Union and UK is separate, so we had to go for a UK e-money license and a EU e-money license. We've chosen a very robust, mature, at the same time, flexible jurisdiction in the Netherlands for the EU, and we intend to do a lot of business through that jurisdiction. We intend to obviously passport the license to the rest of the European Union. The license from the DNB, the Dutch central bank, it has a lot of prestige attached to it, because the Dutch have managed to balance out as I said, the flexibility with really like long legacy of international trade, doing it properly, doing it by the rules, right? So it's a good jurisdiction for that matter. So our role is also to educate the crypto industry on the traditional finance and like what the traditional finance ecosystem expects from the crypto industry touching upon the traditional finance ecosystem when they need those services, when they need banking as a service, when they need payments to be processed, right? From a consumer perspective, it's always very easy to sort of internalize if you're kind of going through a consumer journey. What it boils down to is essentially, I don't want to, as an individual consumer, I don't want to have my transaction topping up my fiat account at Coinbase stopped for 7 days, and I'm waiting for my own money to appear somewhere and just pop in, right? It's like, oh, you can trade, right? I don't want that to be stopped.
Or come back to your regional bank.
Or get rebounded to my bank at HSBC, bless them, I like them, right? Right? Because HSBC and the party that it reached in the sort of traditional finance ecosystem doesn't have enough data about this transaction, doesn't know who I am, and doesn't know what I'm trying to do with my money, right? That is the stupid reason for disintermediation from a new emerging market. That is really a stupid reason. That's why the bridge is needed. That's why the transparency of what I'm trying to do, like let's say I'm a dentist investing in crypto for the first time. Why would you stop my 10,000 euros deposit into Coinbase? Why? I'm just trying to buy Bitcoin. I'm trying to see it appreciate. I'm going to cash out. I'm going to pay my tax, right? And then, all is clear. All is very transparent. But the bank doesn't know what's going on, especially the one that is involved in sourcing or reconciling the transaction on the cryptocurrency exchange, the one that is working with the cryptocurrency exchange. They have no clue, no idea, no data to establish what is Adam trying to do, and why all of a sudden there's 10,000 pounds on this IBAN. They don't have it.
Perfect. And that's an excellent walkthrough to my next question, which is Sophie, looking at the product development that you're going to be servicing to enable to close these gaps that people want at different levels, whether it's consumers and businesses, right? you both, together, I'm sure, have developed a very robust 18-month product roadmap, which you want to deliver and enable in different geographies, right? And we have to be careful about this. Even though Web3 is international, you're going to be moving to geographies and certain locations to start with to do it. It'd be a dream to do this all internationally, all at the same time, simultaneously. But we know it's going to take a little bit of time. So with that use case you just talked about, Adam, so can you tell us about where you are in your product development? What are you focusing on in the very short term and near term? And then sort of give us a glimpse at the end of where you see it all being, towards the end of your product roadmap, which will keep developing, but maybe the long-term picture. So give us a glimpse of that, if you don't mind, please.
Yeah, so I will start with the end, actually.
Oh, right. Okay. Wow.
That's
yeah. Okay. Go for it. Yeah.
No, but the grand vision to explain you where we are in realizing it. So we will be the only API crypto platforms Web3 will ever need. So we basically are, as a first step, an aggregator, a banking aggregator of crypto-friendly banks and banks that we are helping become crypto-friendly by providing them the data they need to actually understand the crypto flows and be comfortable with them. So that's the first thing. And we are doing that across geographies. So like right now we are live in Europe with Euro GBP. Very soon we will be live with USD. We will just after be live with CAD, and then we will have FX. So that's really like a good baseline already to service crypto platforms that actually want to maybe are in the US and wants to go in Europe, that are in Europe and actually wants to serve rest of the world customers in USD and be able to buy, for example, their cryptocurrency from another exchange. So that's really like where we are right now. In the future, we will keep on adding up new rails, and so we are like this is really being driven by our members. So that's part of like the consortium. Maybe we discuss later, but really based on what they need. So we are looking at geographies such as like Asia, Africa, LATAM, and we will prioritize based on the partnerships that we find in those geographies. And where are the best partners? So that's really the first part. The second part is really like the compliance play, right? The compliance first platform that we are building. So Adam has talked about this common language that we are trying to create, and this common language starts with data, and it starts with gathering data that really enables the banks to understand what's going on ramp, on chain, off ramp. We are at the beginning of this journey as well. We have selected our providers. Like in the next few months, we will be releasing the first version of that. And the idea is to go and convince not only the crypto-friendly banks, but the ones that are not crypto-friendly yet, but whose board has said, look, guys, figure out a way to serve crypto platforms, right? And like according to what we see right now in the partnership we are progressing, like this data first approach and really educating and enabling bankers to really understand what's going on in those flows seems to be a relevant approach. So that's the second step of our proposition. The last step is the consortium, and I will hand that over to Adam because that's all his vision basically.
Yeah, I mean it's all of ours vision by this time, but so it's really, it's like Sophie already talked about, like first stage is to get the crypto friendly banks together, right? Second stage is using compliance as an element of persuasion to and the data transparency to convince the big players, because like one thing I always say at this point is right now the banks that are servicing crypto flows tend to be tier 2s, tier 3s, tier 4s that not many people have heard of, with all due respect. Okay? What that means is they have not commensurately big balance sheets. So if something goes wrong, that can sometimes go all the way up to a really dark scenario of a country going bankrupt, right? Because some of those banks happen to be really big retail brands in really small countries, right? But what that translates to is their deposits, which is their cash flow, are coming from a retail population of 600,000 people, right? So you put that aside and then contrast that with what Binance is doing per day, which is $20 billion, right? It's a ticking bomb. I'm going to be very blunt. It's a ticking bomb. And that's why the big guys, the Cities, the Santanders, the JP Morgans, they need to start playing ball, because if they don't, we are potentially heading for a very unexpected, abrupt crisis at some point, and at some point something's going to blow up. I just don't know what that is yet, right? So they need to start moving. They are moving. They're interested, and they want to move into that space. We are here to convince them. We are here to give them the safety net, to give them the sustainable way to take on crypto flows, right? That is our value proposition to the banks, and that's really the second phase, to attract those bigger players on the banking side, to say, okay, I can trade 50 million euros for $60 million for Coinbase. It's fine, it's money for me. It is safe, right? Because Fiat Republic made sure that it's safe, right? And I'm participating in marketplace. I'm not missing out on a massive opportunity here, right? Because my risk approach often is, or my risk policy is based on things that I don't know, rather than the things that I know. I don't know a lot about crypto, right? That's how those bank policies are being formulated, whether we like it or not. And then the consortium is really wrapping all together. It's a bit of a political play, focusing on the crypto platforms to really help them level up, right? To really build this unified voice where it's not Coinbase arguing with Kraken in front of the regulator, right? Which doesn't help. Kraken arguing with Bitstamp in front of a bank, right? Each one of them trying to win over that bank because they really need it, right? That's not helping the crypto industry. So we need to unify the voice of the crypto industry.
Yeah.
We also need to help.
Though. Yeah.
Sure. Yeah, go on.
I think we had a point at which Libra was really trying to lead the way, but it was more self-serving, right? So I think you take a lot of lessons learned from Libra. I think you have to look at projects like MasterCard's open API banking, which actually is very inclusive. You're smiling, Sophie, so you're talking to the guys at MasterCard, clearly. But one element of the consortium, obviously it has its momentum and pace. And before I hand back to Ronit to close, because I think we're running out of time, so we're stretching as much as possible here. One question I have to ask is whenever I look at a business or an idea or a thought process, especially in what you're trying to do, a bridge between two worlds, effectively bringing them closer, communities, activations, because there's a genuine need, and it's only going to grow, right? We saw what happened with people denying Web2. We know what's happening with Web3. We can't even touch upon that in this conversation. There's a 200-page report that's out there written by some good friends of ours on this call. I don't know who they are, that guy there. And so, there's so much to do, but people are a huge underlying process to this. And we're in such a young industry. I know you said Bitcoin is an old currency. That in itself is a crazy thing to say, right? Because it's so young in terms of any currency that's ever been out there in our existence. But looking from that point of view, how are you recruiting people? Are you getting people from the traditional banking system to be on your boards or advisory? Are you getting them to be a part of your product stack, development stack? What is your ability to actually scale your company? Are you finding we're overwhelmed. We've got 10,000 applicants for all our jobs. Are you guys finding it difficult? I'd love to hear a little bit about that, please.
Yeah, so it's a good question. I think for this to work, you need to pull people from the crypto side, and you need to pull people from the traditional finance side, right?
Right, the bridge.
Ultimately, that's what the banks need to start doing,
right?
Bringing people that understand crypto. That's what the cryptos need to start doing, bringing banking, and anyone that wants to try and play the bridge in between needs to be able to attract both of those sides. That's why, you know, we're a bit of a hybrid. You know, we call ourselves Web 2.5.
If you don't,
I wonder who gave
have you got t-shirts for that? I want that.
Who gave you that idea, Sophie? Who gave you that idea?
Exactly.
T-shirts right now. And if you guys don't patent that or copyright that, you guys.
We did. We did.
Hang on.
Yeah.
Gaurav, you know who gave them the idea?
It's Ronit.
Oh,
Just so it goes in the record. This is being recorded. Just so it goes in the record.
Absolutely.
Web 2.5.
I told you I would give you
For the
the
record.
cheers.
Yeah,
for the
exactly.
record.
Credit.
You're listening to this on your Spotify, Apple,
But guys,
Google podcast of choice.
But
But
tell
that
us
is
about
what
You got the
Just to-
t-shirt as well.
I
Look
need
at
to
that.
send you the t-shirt. I will.
Sophie,
Ronit.
where is my t-shirt?
Where's
I
mine?
mean,
But
No,
seriously,
I don't know. I don't have the web. Oh no, she actually.
there
has
she's
it.
got the, yeah.
but tell us, guys, what does your team look like today? And
So
how are
it's
you?
23 people distributed right now. So like it's quite remarkable. Actually, we're a 10-month company. We're already 23. It's quite, you know, it's a testament to our brilliant CTO co-founder who managed to hire 12 developers in 2 months, really good ones. There's a good dynamic going on there. So we're split between UK, London, and Poland right now in terms of where we're heaviest in terms of number of employees. We're further because we're going for that really solid presence in the Netherlands. We're going to be hiring people there. You know, substantial amount of people actually. And then Toronto in Canada as well is a location of choice for us. Where part of our tech or development team is going to sit. So as you can see, a lot of distribution. But in terms of attracting talent, we found that, you know, getting people from the traditional finance world, getting people that understand crypto, although they might not be experts, we're managing, right? It's not like we're running out of options and need to go, you know, super extra mile to find good people. Somehow we managed to find and get together, you know, with great people organically. So that's
and
great.
We offer them the extra perk of Friday crypto trading session with Adam. So all the company can become day traders by joining our
Not
Friday
official investment advice.
wow.
Disclaimer: I'm not giving official, you know, formal investment advice because I'm not qualified for that.
And you wanted that to go out on Spotify and everything else, more as a officially long statement. But Ronit, thank you guys so much. Ronit, back to you. So unfortunately, I think we're
out of time. But maybe just to wrap up the whole conversation with a big picture question for Adam, just pull it all together. You talked about decentralization in terms of, you know, obviously your company's been built in the sort of hopefully the latter half of the pandemic. The underlying crypto economy, Adam, that you got really interested in is, of course, built on decentralization. Where do you think we are, Adam, in that spectrum of decentralization versus centralization in financial services? As you look out, not today so much, but the next 3 to 5 years, are we still going to be a very centralized financial system, do you think? Or are we going to slowly move along the spectrum towards decentralization? I'm just curious to think of your big picture thoughts on, effectively, it's another way of asking broader mass market institutionalization of crypto, I guess is an easy way to ask that question.
Yeah, so it's a great question, and many people are asking that question, right? It's like, you know, I ask myself, you know, what's actually going on? Where we are right now is the very beginning. I don't know if you guys are familiar with diffusion of innovation. There's like a theory.
Tell us.
Yeah, there's the, I think this is Harvard Business School. So I don't want to quote verbatim because they're going to, you know.
A lot of disclaimers in this podcast.
They're going to sue me, but there's...
yeah, they probably care more about copyright than I do. And chat messages with Sophie.
There's a few t-shirts, they'll be fine.
There's the, yeah, I know. There's the innovators, right? Or at the beginning, early adopters, right? Early majority, late majority, and then mainstream, right? That's the stages. I think in crypto, we're at a stage of innovators trying to attract the early adopters, right?
You think we're that early?
Yeah, I think we're that early in terms of you know, just looking at crypto, because crypto, like many people confuse metaverse, crypto. Oh, this is the same. No, that's bullshit.
We know.
It's not. But crypto,
we like metaverse. It's just
we love it. It's just that you need to appreciate these are two different worlds, right? JPEG with a monkey is different from a fungible token that you can, you know, you can pay with, right? It's a very different thing. So on the crypto side of things, specifically, we have centralized crypto exchanges acting as hubs. Like you heard the word centralized, right? I think this is very ironic that, you know, in the first iteration of decentralization, we have to be centralized, right? We have to have those hubs where people go to
CDFI.
Yeah,
I think
exactly.
Binance called it CDFI, centralized DeFi.
And say that we are here to buy Bitcoin, but you know us, this is my KYC, this is my bank, you know, it's all in one place, it's centralized, right? It's funny, it's very ironic. I think the next iteration, I see a lot of potential with stablecoins, actually, on the decentralization side of things. It's
so not just as a on and off ramp for trading crypto,
no,
something,
I
something socially more useful than that.
Yeah, I see this as a way into crypto and way back from crypto, but also as a way to build a payment system, right? That could have elements of decentralization baked into it. But at the ends of it, it's almost like there's the middle of it, the you know, when money is in transfer or is on its way from US to Sri Lanka, right? But on the both ends of that transaction, there's going to have to be a centralized process to make sure that both sides of the transaction understand what's going on, right? So decentralization and also blockchain specifically and digital ID, that I believe really strongly blockchain is made for, okay? That's going to help with again, ironically, with increasing the adoption of an offshot of crypto, which is a stablecoin ecosystem. Stablecoin today, if done properly, if there are, you know, willing partners on both sides of the transaction, right, can replace SWIFT, 100% today. Right? It's just you need on those two sides, or like the beginning and end of the transaction, you need anchors. You need traditional financial institutions that understand what's traveling through the protocol, right? And are intercepting data, are learning about the customer, are keeping their KYC controls, are keeping their AML controls. But the protocol, the stablecoin rails, this is ready. It's ready. It can do this. It can go, it can scale to trillions of transactions per day. It's ready infrastructurally, right? So that's where I really see, it's like a couple of paradoxes here, but fiat is going to be a very important point for years to come of entry into crypto, right? So that's why the next 10 years, I believe we're Web 2.5. Web3 native companies are going to be still on the sort of the axis of diffusion of innovation, still on the innovators, trying to attract early adopters, really work night and day. There's really amazing developers solving tough problems behind the scenes. Just no one knows about them, right? Because they haven't marketed that solution anywhere. They haven't succeeded in like initial pilot use cases, right? And they haven't gathered you know, critical mass yet, but that's bound to happen eventually. I just think the cadence, like we're looking 10 years of pretty much the same you know, pace of progression towards decentralization.
So we've got a decade of Web 2.5 ahead as we move on the path towards decentralization. There are so many more questions that you've raised in these last 3 or 4 minutes, including the, you know, imminent replacement of SWIFT, which I'm sure lots and lots of bankers, if they are listening to this, I don't know if they are, will have so many questions about, but we just have no time because we've already gone about 10 minutes over. So I think let's draw this to a close and maybe we can invite you back to talk about the future of finance another time. Thank you so much, Adam. Thank you so much, Sophie, and Gaurav zooming in today from Sweden, unusually. So we're doing this between at least 3 different locations today.
Perfect.
Thank you, guys. Thank you.